Adam Strauss with Pekin Hardy Strauss Wealth Management. I'm here with Matt Bloom, my partner at Pekin Hardy Strauss Wealth Management, and we're here today to talk about life insurance, both term insurance as well as whole life insurance, to help people think about their life insurance strategies and what makes the most sense for them. So Matt recently published a piece on it, and we're going to be talking about what Matt wrote in this piece. So Matt, why did you feel like it was important to write this report?
Well, first of all, life insurance is one of the most commonly used and owned financial products in the United States. Somewhere around 70% of all Americans have a life insurance policy of some type. So this is an important topic for a lot of people. This is a really common type of financial tool, but I think there's a lot of misunderstandings out there. A lot of folks don't understand what the options are and how they're similar, how they differ, and what types of life insurance products make sense in different situations, because there are a lot of different types and they have different characteristics. And so but I think a lot of people don't fully understand what the options are and what really fits in their financial plan. So I wanted to delve into this a little bit and help people better understand what might make sense where.
Great. Okay. Well, if I get a call from a life insurance salesperson, what are some of the things that I need to know? What are some of the tools that I should have at my disposal so that I can make a good decision and not make a bad decision?
Sure. So first off, understanding the big primary types is really important, right? So the two main types of life insurance are term insurance and permanent, also known as whole life. And the names are actually descriptive of how they work. So term insurance is a policy that covers the insured person's life during a period of time. It's a limited term that it applies. Typically, they're like 20 years, 30 years, something like that. After that term is over, there's no more life insurance coverage. Permanent life insurance, as the name implies, lasts throughout a person's entire life until they die at whatever age that might be. And so those policies are effectively guaranteed to pay out at some point because everybody's eventually going to die. So those are the two main types. And so when you're thinking about, okay, what type of policy am I interested in buying? You need to think about, well, what are the types of things that what are the risks that you're trying to mitigate, right? If you're somebody who's in your earlier life, you've got young children, you'd like to provide for education, you obviously want to, or you've got a spouse that if you were to die, you would want to provide some of those lost future earnings for that spouse, or you've got liabilities like a mortgage that you'd like to have covered if you were to pass. So you want to think about those types of liabilities or needs that you would effectively need to cover with the proceeds from a life insurance policy. But you also need to think about
Matt, before we go into all the details of the different types of policies, what is the typical risk that most people go to a life insurance company for? I mean, obviously it has to do with getting some kind of a payout if you die, but like you mentioned earlier that 30% don't even get life insurance. So like, how do I know whether I even need life insurance?
That's a really good fundamental question. A lot of people don't need it unless there's somebody relying on them, right? It really, in our opinion, what life insurance is designed to do is cover lost future earnings of a breadwinner, right? So if I was a single 20-year-old who only, the only person depending on me is me, I don't have much need for life insurance, because if I die, nobody is going to, be out those future earnings. But if I have children, I have a mortgage, I have a spouse, those types of things where there are other people relying on my future ability to earn money, then there is a need for life insurance. That's really what life insurance is. It replaces lost future earnings.
Got it. Okay. And so we're here to talk about when you have that kind of a risk, what are the different options that are out there, and what are some of the things to think about in terms of what are the best options for me? Should I want to try and mitigate that risk through buying a life insurance policy?
Right, right. And that's where I was going next with when talking about the term versus the permanent. In our opinion, permanent only makes sense in kind of select situations. And that's because for most people, there's a limited period of time when there are other people truly relying on them. As you get older, typically you are accumulating financial assets, right? So by the time you are, say, retirement age, you've got theoretically a significant pool of capital that you've accumulated over time. In addition to that, you've paid down liabilities, and your dependents are typically out of the home, are no longer dependents, they're independent. And so you don't have all these same people relying on these future earnings. Plus, you've already earned those earnings. They're no longer future earnings, they're now accumulated capital. And so by the time you get to the end of that sort of term, that chunk of your life, there's really not much need, for most people anyway, for insurance to cover their life. And so the idea of permanent insurance oftentimes is not appropriate because you're paying actually higher premiums for permanent insurance, and I'll explain why in just a minute, to get like the same amount of coverage, yet you don't really need it in most cases beyond a certain point in life, because you just don't really have anyone depending upon those future earnings anymore.
That makes sense. So, in the beginning of my career, I probably don't need any life insurance, but once I get married and have some kids during that part of that career, if I die young, I could really put my family in a really bad spot. And so to have some life insurance to provide some financial cushion, should I die unexpectedly young, would be a good idea. But by the time I reach 60 and my kids are out of college and they're off on their own career, and I have a bunch of retirement savings saved up, and I'm ready to retire myself, so my earnings are about to go away, I don't necessarily need life insurance there because I don't have a family that's as dependent on my earnings, and I also don't have earnings anymore that I have to, right?
Exactly. Yeah. Insurance is a risk mitigation tool. And when you reach that stage of life, there aren't very many risks left, right? You've essentially, you've gotten rid of a lot of those risks by that point in time.
Okay. So in light of that, you mentioned you got term life insurance, you got whole life insurance. How should I think about which one to use?
Sure. So obviously I've talked about, what types of things, the term covers a term, whole life covers your entire life. But the other major difference between the two is that term life is pure insurance. It has no value except upon the death of the insured. Whereas with whole life insurance, or permanent insurance, it does accumulate value. It's almost like building equity in a home. So a portion of your premium that you pay on a whole life policy goes into a cash value pool. And what that does is over time, it grows in value. Typically, it gets credited with some amount of interest. There are also versions of this, like variable universal life, where you can have it tied to some kind of market index or something like that. But effectively, that cash value grows over time, and it does become a pool of capital that a person can access while they're alive. So there's the regular life insurance component, and there's this cash value component. But importantly, the premiums are much, much higher, right? Because you are accumulating this sort of equity in this cash value. Plus, keep in mind, that policy is insuring you for your entire life. Therefore, the insurance company knows they're going to have to pay on that policy. So the insurance cost itself is higher than it is on term policies, because most people who have a term policy don't die during that term. And so there's risk pooling across a large number of people. A few of them will die during the term, but most of them won't. And so the insurance company doesn't have to allocate as much capital to paying out on those policies. Whereas on permanent life insurance policies, they are going to pay out. They know that, and therefore they have to increase the insurance cost itself in addition to the added cash value component of the premium. So that's why it's significantly higher cost for the same death benefit as you would get with a term policy.
Right. So the whole life insurance is higher cost, but you get the insurance for your whole life. It's not just some specified 10 or 20-year term. Mm-hmm. And on top of it, you've got some kind of a investment component that grows over time.
Right. Yeah. And now for some people, they really like the idea of that cash value, but I would caution people that they really need to understand what the growth of that part of the policy looks like. Because for a lot of policies, it can take years and years and years for that cash value component to actually exceed the amount of premiums that have been paid in, right? And it's typically not going to grow like traditional investments are, right? It usually, there are a lot of variations of this, but it's typically going to have some low growth rate applied to it, some sort of sub-market level growth rate that would get applied to it. So,
so it's an investment, but not a very good one.
Exactly. That's kind of the way we see it.
Okay. So what? I mean, I understand why I would want to purchase a term insurance policy. Why would I want to purchase a whole life policy?
So the most common reason that to me is valid for someone to have a whole life policy would be if they have a very, very large estate that exceeds the estate tax exclusion exemption, which is, for an individual like 12.9 million, something like that. So, if somebody has a really large estate and they want to pass some money on to heirs without triggering that estate tax, payouts from life insurance policies are tax-free. And so it's a way to more efficiently pass on very, very large amounts of wealth. So if I have its own costs and complications, but estate planning for very large estates, they can make very effective use of whole life policies. So if my net worth is $100 million, there might be some whole health policy out there that I can structure, probably with my estate attorney to try and avoid some taxes upon my death. But exactly. What if my net worth is not 100 million, but more like 5 million? There are a lot fewer reasons why you would want to own permanent life insurance. But that answer surprises me, because there are so many prospective clients that we meet who have whole life policies. So if there's so little reason, why do so many people have whole life policies? Well, unfortunately, I think it has a lot to do with the compensation structure for insurance agents. They get paid a lot more to sell whole life policies. They are heavily incentivized to sell whole life policies as opposed to term policies. And it's because the insurance companies themselves find the whole life policies to be quite a bit more profitable. And so they do incentivize their sales folks to focus on whole life. Is that why whole life policies are so complicated that they're almost impossible to understand? I think that's also part of it. In my opinion, complexity typically favors the seller, not the buyer. And whole life policies are complex. And I think a lot of the people who do buy them don't really understand what it is that they own or why they own it. Again, I don't see a lot of reasons for the typical person to ever own a whole life policy. And yet I see a lot of them with clients that come in, they've got these whole life policies, and typically once we talk through it with the client, the client tries to get out of the policy or convert it to term or something like that, because usually they buy it when they don't understand their actual insurance needs.
But probably better not to buy it to begin with.
Yes. Yeah. Now let me be clear though. I think that term life insurance is an extremely efficient risk mitigation tool. You can get a significant amount of term life coverage for a very reasonable cost. It's really an affordable risk mitigation tool. And so I strongly encourage people who have dependents to get a significant amount of term life insurance, because it's per dollar of coverage, it's really, really cost effective.
All right, personal question. Do you have life insurance yourself, Matt?
Of course I do. I have a young daughter, and so yeah, I do have term life insurance.
Term life insurance. Okay.
Yes.
Okay. And if I get a call and I don't know what to do, a call from an insurance salesman and I don't know what to do, should I call you and get some advice?
Give us a call and we'll talk through what your insurance needs are, and we'll help you find the right type of product.
Okay, good. Anything else that you want to talk about that we haven't discussed yet?
No, I think we've covered most of the important stuff. I would just reiterate the point that in our opinion, life insurance is not an investment vehicle. It's a risk mitigation tool. And we believe that investments should be kept separate from risk mitigation, right? They're two important but separate pieces of a financial plan. And that's why we really encourage folks to focus on term insurance in most cases. And if you're unsure, let's talk about it.
Terrific. Okay, well, let's wrap it up. I think that the piece that Matt wrote on life insurance, it's called Life Insurance, a Risk Mitigation Tool That Should Not Be Considered an Investment, goes into a lot of what we just discussed right now, but in a lot more detail, and with some charts and graphs as well. I encourage you to read it, and I encourage you, if you have any questions, to reach out to Matt. He's our resident life insurance expert. So thank you for your time, Matt, and for sharing with us some of your expertise on life insurance.
My pleasure.